Welcome, folks. It is Sunday night, and welcome to the Kendall Report. So much to talk about, and I'll go through our database, which was a lot of activity going on, as I expected. If you follow me on Twitter, you kind of know what happened, but I'll go through the details. I'm going to spend a little bit more time on the database just because of the shift that we're seeing, because I want you to understand what this means. So let's take a quick look back on last week. We were down 2.2 on the S&P, NASDAQ down 3.2, but the Russell way outperformed, only down 0.3. And as bad as things looked last week, of course, we saw that reversal rally on Friday. When I was getting ready for the show, the futures were up 12, 14 handles. They're now minus 550. So I was hoping for some follow through. I think we'll still see it. I think I'll go through the details and the technicals here in a minute. But I think there's a possibility of maybe getting a few days upside until we come into some of the ADP numbers and those type of things that are coming out this week. Energy continues to be on fire, no pun intended. There's shortages, obviously, in the UK, and there's shortages in China with electricity and just about everything. And not to mention the container boats that are out there. A 4-week wait. If you're sitting on a boat right now on a container ship trying to get into Long Beach or into LA Harbor, it is a 4-week wait just to get in. And the reports even out of New York is getting backed up in some of the harbors there. And of course, we've got other things to deal with on the East Coast, especially north, is going to be weather's not going to be far away. And we're coming into fall, but things are going to change drastically all over the place. So this week, as we kind of look forward to what's going on, the big thing this week is going to be the employment numbers. That's going to drive everybody, and I think that's going to keep the market somewhat neutral as we come in through this week. There's not a lot of material stuff other than that. On Monday, we got factory orders up, expected up 1%. The ISM non-manufacturing comes out on Tuesday, 59.7, so it's going to stay in expansion mode. Nothing really big there. ADP, 400K jobs. So this is where I think the rubber is going to meet the road, is what kind of numbers we get this week. The similar number is expected on Friday, but I just think this unemployment number is going to start to fade a bit, and we'll see what kind of numbers we get out of ADP. We're also seeing on Thursday, we got claims coming out, expected 345. That number's been missing to the upside. They've been increasing a little bit. Continuing claims up 2.8 million last week. I'm looking for a number to move back above 3 million. And I think that's going to start that trend that I've been talking about. It may be a little early yet in the cycle, since we're early in October to have this happen, but I think that's going to be a thing. And that's what's going to drive this market this week, is these numbers. I've got a couple of things I won't go into a big rant, but there's a couple of things I need to cover. But the Fed scandal continues to unravel. Another president getting caught buying stock, oh, surprise, they're going to take down the whole thing. It looks like Powell might be out. He's not operating on the level that some of the folks, especially his old boss, Janet Yellen, wants to see happen as far as the spending goes. And, there's the other big thing that is happening out there is the infrastructure deal. I told you last week, if they didn't show up to a vote, then this thing was going to be dying a very fast death. And we're seeing that exactly happening right now. The infrastructure deal, if you remember, we started talking about this back in February. And I knew it was going to be multiple months, a lot of noise around this. Market participants continue to expect to see this deal come through and they're going to spend all this money. Well, maybe not so fast, because now we're looking at the $3.5 trillion deal is dead. Maybe they get $1 trillion, $1.5 trillion off, And I don't think they're going to get all the social spending that they want to see. And especially with, I guess the best way to look at it, especially with the opposition, not only on the Republican side, but even within the Democrat side. It's getting very hard, it appears, at least from looking from this viewpoint, that the Biden administration's agenda is going to be very difficult to execute from this point forward. I believe Joe ran off to Delaware after his failure last week, so we'll see if he gets back to Washington anytime soon. But this thing is really unraveling. And, you know, I guess the big thing, the rant that I do want to go on a little bit is this supply chain situation. And Janet Yellen and her testimony the other day just kind of blew this off like, oh, this is something that's happening. It's going to get better. We're seeing month over month inflation start to moderate. No, we're not. I don't know where she gets these numbers. They show up, all these people, especially the we'll call it the cabinet of Biden. They show up and they just say whatever they want you to believe, even though it's not true. And it's very obviously that's not really happening. There's a couple little downticks there, but those were expected from the standpoint of the inflation. So the big is, can this supply chain issue just derail everything? I mean, I talked to you about, and I'm going to cover energy tonight, but energy looks to me like this thing is just on a run big time. And I think some of this is going to be disruption of supplies, which we're already seeing in the UK. What if that contagion happens? Where does oil go if we start to see more of this? And even though Kathy Wood actually thinks that crude oil will go the way of whale oil, which is laughable, that somehow magically everything's going to be electric next week. Maybe she's talking over the next 100 years, I'm not sure. But the bottom line is the energy patch is just really rolling. And you can go across the board. You can go to coal. You can look at a lot of different elements, and all of these markets are going vertical. I'm going to show you here in a minute. I'll go through the BDI, which is the Baltic Dry Index. That is just exploding. Everything is just anything to do with shipping, energy, all of this stuff is really starting to get out of hand and maybe about to spiral much higher. And, you know, I just think we have to watch this very closely, and I don't see it getting solved anytime soon. I've said this many times that the worst job in the world is working on a container ship, and if nothing else, getting stuck outside of Long Beach and can't get in. I saw another report where some truck driver is waiting to get loaded, and there was one crane operator, 3 cranes, but only one working because they can't get anybody to show up to work or to do these things. So it's very slow getting trucks loaded. The trains can't get loaded. It's just a total bottleneck. And some of it is just because of the mass amount of merchandise that's trying to come into the port. It's not necessarily, I mean, if it was normal, nothing's normal. Everything's been disrupted at such a high level that there's no way to get things back on. And my analogy that I talk a lot about, everything was just working. We operate on a just-in-time inventory system. And then what did we see? We saw basically somebody turn the switch off. And you know how it is. Once you turn it off, it's like going to an airport and there's a big storm. It might take the airport 3-4 days, sometimes over a week, to get schedules back online. You shut something down as big as the shipping channels and the shipping supply chain, and you've got even a bigger issue. Here we are, you know, well over a year, and we're still struggling, and it doesn't appear to be getting better. It appears to be worse. So I believe that's going to have some impact as we go forward, especially as we come in to the winter. Things are going to get a little more. Let's take a look at some things here. I want to go into the database. There's quite a bit to talk about here that I think will be helpful from the standpoint of where everything is at. What we're looking at here is the intermediate database. Now, this was 55% last week. On Friday, when this servers ran, I think I misquoted this number. I think I had 5,800. It was actually 5,318 were the actual number of sell orders, and we had 251 buy orders, but it dropped the percent bullish from 54 down to 42. And you folks all know 42 is that magic number. So we're not below the metric where it shows that we've got a huge liquidation, but we did get a mass liquidation. And I'll show you another chart that's on the dashboard of the Portfolio Expert website, because that is going to be, I think, actually illustrating what's going on a sub level as well. But we're looking at a lot of selling, and I'm going to go through a couple examples here just to show you what this means from a portfolio standpoint, what it means from a bigger market position. I just saw the super chat, so thanks, Richard. Appreciate it. But here's the primary thing that I want to pay attention to. 42%, if we continue to see liquidation this coming Friday, that's going to become material, and we're likely to go down to probably 28, maybe 22% on the intermediate. If that were to happen, that would suggest that we're going to be in a pretty big liquidation in the markets. There's a couple things that over the next 3 days, I think I'll be able to nail down once we get through. So probably Tuesday night's video will be pretty good. I don't know if I'm going to have any time for a live stream on Wednesday, but I'll try to do something if I do. It just depends on this week. It's kind of uncertain at the moment. But let's go ahead and let's just go to the daily models here real quick so you can see what happened there. And then I want to show you what's going on with a larger index. So let's go ahead and take this up. Now the daily models actually got some traction. So that reversal on Friday, we were at 21.04% bullish. We're now 23.69. We saw a 696 buy signals on a short-term basis and 246 sells. So we got a little traction back in. You guys know the routine. 42% is a long ways away. So we can see some traction here. I thought maybe we're going to get a full liquidation, and that reversal on Friday was pretty significant. And you'll see when I go through the technicals here what I think is going to happen. We may see this thing claw back to 27, 20, closer to 30% over the next several days, because everybody's going to be on hold here with the employment numbers coming out on Friday. So what I want to show you next is I'm going to go to our portfolio manager, but what I want to show you is what we call a premier. This is the S&P 500. So every stock in the S&P 500. Right now we've got 499. We had to deactivate one, and we update this on a quarterly basis. So, but basically what we're seeing here is a fair amount of selling. We saw 50 exits, only 6 new buys. So that's pretty much the ratio that we saw across the database. It was a 53 to 2. This is 50 to 6 here on this set of stocks. But the reason why I wanted to show you this is what kind of liquidation we're doing, and I want to show you the performance here. This strategy, this is just the S&P stock. Nobody's picking it. Nobody's cooking any books trying to make it look good. But when you compare against the index, the black line is the S&P. The blue line is, this goes back to 2000. The blue line is managing each stock individually. So obviously, we're trying to work on a automated feature where you could actually trade this strategy, and you can see it's quite a bit better than the S&P, and even going back to 2008, 2012. But what happens here, and this is why I want to spend a few minutes, because you understand when this database rotates like what we're seeing. The element that's important to understand this is that what happens with this with the inside of a portfolio, we start to see it to raise cash. I'm going to show you some cash levels here in a minute, but this is important to understand because when you're looking at a large database, you're looking at 16,000 symbols, and then you bring it down. This is a set of 500 symbols, and what you're going to see is this top equity here is we're going to freeze the equity up here. Otherwise, we're going to start to raise cash. We're not going to let our equity or give back much of our money. So we start to see a negative rotation from the standpoint of the number of buys and sells like what we saw this week. And that number should continue. What I want to show you here is when we go back to the portfolio manager and I go to the stats here, this is where it really starts to be very evident what's going on here. Just bear with me while this is coming up. And I actually want to go back to the summary page, not the page I went to. Yeah, so what we want to look at here right now, and I've told you folks this, the S&P 500, so all 500 stocks, 499 currently. We'll update this probably this coming week. I think it gets updated since we just finished the quarter. But we're looking at 39.36% in cash. So what happens when you start to see moves like last week, interesting things happen. So last week, I told you the S&P was down 2.2%. Well, this is all the individual stocks of the S&P, and it was actually up 0.58. So when you get rid of all the crud in an index, you can actually start to manage the index, and this is something we call dynamic direct indexing. And when you can do this, you can make these indexes so much better. I showed you the overperformance, but you can do this with ETFs, all that. The point of this is just to show you that when you start to eliminate all the stocks, and this is the problem with ETFs and indexes and all of this stuff, as you end up in here. So I just wanted you to understand, so when we get all this selling that comes in, it doesn't mean that the end of the world's coming and the market's going to roll over. It just means that we're adjusting the net exposure to everything. So if you look at one more time, I'm going to bring this up. Let me see if I can zoom in on this so you can see these numbers. This is important because I want you folks to understand when we get this mass liquidation, you don't go out and buy S cube right away because that isn't what it's telling you. So let me just move this around so you can get to. I'm just trying to get this zoom to work. Bear with me. It's not going to work. So what happens is we're at 28% in cash last week. Now we're going to be 39. So we're raising the cash. If this continues, this portfolio could go as high as around 55 to 60%. Because it's such a large set of stocks, it's not going to do that. But my point of everything and taking your time and my time to cover this is that when the database gets to liquidation, it doesn't mean the end is coming, like I just said, and you just sell everything. You start buying as much SQs and short triple leverage S&Ps. That's not what it means. It means that we're going into a protective point in the charts, and it doesn't mean that there's going to be the rollover. I think I made that point. I think I said it 5 different ways in the same sentence. So let's go and take a look. I want to show you a couple of things that I think are setting up that are important. So let's So I told you I was going to show you the BDI. I'm going to go there first. I just want you to see what this looks like right now. And this is a monthly graph. The highs that we got to back in 2008 and 9, right before the big collapse, was around 9,500. We're now printing, it's actually 5,200, and this thing is off the map. You can see these are the PPMs on TradingView. And you can see PPM 1 and 2 and 3 are just off the map. They're up almost 10% per week right now. So this is part of the supply chain that I just talked about that I think is going to be important to keep an eye on. I think this thing is going to continue. We could see a consolidation here, but there doesn't seem to be anything to stop this right now. The other thing, just going to transportation right now, I've got the market grid here on the trannies. This is a monthly, but there's an interesting perspective. I'm just going to take that off for a minute. I think what we're seeing here, this is potentially a wave 4 that's happening on transportation, and there could be another surge to the upside. I'm not sure this is going to end the way that it looks right now. So we got PPM still quite positive here, up at 1.123, 1.46, and 0.86 on, and this is a monthly chart. We go back to weekly. This is where you see, I think, the fourth wave a little better. You can see 1, 2 here, and then you can see a top of a 3 and an ABC 4. And if these PPMs start to bottom out here, and I'm going to keep a close eye on this, but this may end up, this thing has been going down since, what is the date here? This has been going down, you know, I believe since May or so, and we're just continuing to see it deteriorate from the PPM viewpoint, but I think we're going to see this set up. So this may set some stability in the markets, and like I said, the reason why I showed you the S&P chart and the configuration on the dynamic direct indexing is all this happening right now is eliminating the stocks that aren't working. And that's why when you have a quant process like we have, you are able to change that risk profile. If you're just trading outright indexes, it can be a pretty brutal game, obviously. But looking at how the dynamics unfold internally in the markets is really important to understand. I've got see what else I have up here. If there's anything else, I'm not going to go through any of these other charts. So let's go over and go to this is the S&P chart. We're down 25 cents. So like I said, we printed up, if we just look at the range for today, let's take a look at the overnight range right now. We're looking at overnight range. We printed 41, let me get to the right point. We printed 43.62. R1 was exactly 43.62.25, 43.62 even, so we missed by a quarter. And then the low so far, 43.36, S1 43.25. My guess is that we will see probably move up potentially to at least to an R2 and the possibility of getting around R3 to 43.83. So I think we're going to see more recovery, even though we're seeing a little bit of weakness overnight right now after the stronger move. But look at the PPM1 here. PPM1 has turned up to its first second derivative. It actually was down just the other day. We were at minus 0.22. We were at a downtrend mode. That reversal that we saw on Friday was big. If we can close higher than Friday, so that's going to be a close of 43.43. If we can close above that number today, we're likely to get at least one more day to the upside and probably move potentially up to above the 44 handle, maybe 44. The 21 period is 44.18. We might be able to move above that, but we're dropping about 10. So probably 43.90. I'll be able to tune this in after what we see tomorrow's action. Tomorrow night I'll be able to hone this in pretty close. So this is a significant pattern that's happening here. Let's go to the weekly. and I'll try to accelerate. I'd spend a lot of time on that front end stuff. But here we are, 21 week, 43.45. I talked about the 43.30, 43, right at this range here. And we managed to close back above it. We got that big rally on Friday that moved us back above some of these key numbers. So we're not seeing the big acceleration. PPM1 is flat. PPM2 is still in trend mode, which is the 21. So we're still got some upward bias here. 43.45 is going to be the number to watch. We should see the market move on either side of this. We look at the weekly grid here. We're looking at the potential S1 4308 and R1 4379, R2 4419. So we easily could see something to print back above 4400, 4419, 4308 could be a pretty good range to watch out for, because I think there's still going to be some upward bias. And like I said, nobody wants to probably be short or doing anything too much ahead of the numbers. ADP will maybe have some effect, but it's really going to be, everyone's going to be focused on Friday. And I didn't mention it in the opening comments, but we're still about 2 weeks away from earnings coming out on around October 18th. That's when that will kick off. So expect to see maybe some things going on around the earnings reports, but not before then. So let's go ahead and go to SPX. We'll start with weekly. We'll go top down. Same numbers. 43.52 is the 21. 43.57 was the close on Friday. We look at the market grid for the weekly S&P. What we're going to see here is S1 43.26, R2 42.22. So probably an S1 R2 potential this week. But like I said, I'll be able to set this up after we see at least the first couple of days. I just don't see the market selling off into the employment numbers. Most folks are going to wait to see that. So let's go ahead and go to the NASDAQ. Let's see, so we're doing top down. So let's take a look at the daily numbers on the SPX for tomorrow. Yeah, that's going to be 43.41, R1 43.72, possibility of 43.89 on the S&P. Let's go to NASDAQ, start with daily. This is interesting because the NASDAQ futures printed out 14,835. They were 100, just 100 points higher than where they are right now. They were up 70 handles earlier. So some big selling come in. I think, like I said, same thing here. We're looking, this is daily NASDAQ futures. We're looking at 14,705 S1, R1 14,817. We've actually, we're above that. Look for an R2 possibility here. So S1, R2. And once again, these PPMs are trying to turn up. So this is setting up a possible little minor bottom here. And what will come into play is the 21 period moving average will end up being on a daily NASDAQ, will be a simple average, will be the primary number to watch for. It's dropping right now about 40 handles per day. It's 15,245. So in 3 days, we're going to be printing pretty much just above where we are now, around 15, probably around 15,100, maybe 15,050, right around 15,000. That's going to be the number. And that will be your major resistance as we come into this week. And that number is likely to keep things under. That will be your major resistance number. The PPM 2 is 0.26, so it's in trend mode. That's going to be your key number. The only thing that's happening here, the 21 is crossing the 40, which usually signifies at least a minor low at these levels. Let's go to the weekly. Weekly, same numbers. 21-week moving average, 14,726, trading 14,734. So we're trading right on that. The weekly expectation extreme would be S1, R2. There we are, R2 plays out perfect to what I just talked about on the daily. R2 would be 15,042, S1 14,629. So like I said, we're not in that point where we're in this full out collapse mode. That's not where the markets are. What we are in is in a period of time that we're likely to see a high level consolidation, seeing our database on an intermediate start to back off, suggesting, hey, you take off some of the profits, you raise some cash, you change the beta to the market so you don't get overexposed at these levels. So what we're seeing is just a basic exposure change from our portfolios. I could take you through hundreds of portfolios like I did the S&P 500, and that's what you're seeing. I've been talking about it for the last week. 40 to 60% in cash, depending on the configuration and what symbols that you would have in a portfolio. So you're already protecting yourself, so you don't have to worry about all of these moves I'm talking about. This is just the setup for what's likely to happen as you go forward. But the weekly charts, PPM 2 is a plus 0.44, and that's right where we're trading right on that support level. The current probabilities of closing under that number are less than 30% right now. So 70% chance that we come into Friday and we're above 14,726 roughly. That's going to be the number to watch. So there's a high probabilities that this trend is still in place. And like I said, the ultimate range would probably be between the 21 period on the NASDAQ and the 10 period 15,191, 14,726. That's going to be your trading range for this week. We might dip a little bit below that 629 number, but I don't see that at the moment. That high rising 21 and that PPM2 is going to keep a lot of underlying trend still in there for some support. I know I'm going strong yet, and I'm only at the NASDAQ, folks, so bear with me. Let's take a look at the Russell, and this says we're just going to use the weekly Russell. I'll show you the spread, but the Russell just continues to be right at that inflection point. We're seeing all three averages. Look at these three averages. It's incredible what's happening right here. Is what we're seeing is 2238, 2250, 2232 is the 10, 21, 40 moving average. We've completely just merged there. We have, if we look at the PPMs, they're just flat. PPM 3 has the most upward bias that's at a trend mode. So that is the 40, 22, 32. And if I look at the overnight futures right now, they're down 750, 22, 28. So we should continue to hover around that number. And these numbers are so tight. I still like that pivot number I've told you folks about, 2250, 2254, right in that range is the point where you'd want to see the market get above. And then we'll start to see the spread continue to improve. Let's go to the spread real quick and take a look at this. This is the Russell versus the NASDAQ, and you're seeing the spread is starting to uptick quite a bit, and I think this is going to follow through. This is actually very encouraging just from the standpoint that we're going to get a high-level consolidation. I talked to you, I didn't cover this in the S&P a minute ago, but I talked to you about the potential of getting down to around low 4,200, maybe 4,100 range. Well, that little reversal we got entered overnight on Friday, we traded down to 4260, and I mentioned this a bit on I did what they call a Twitter Spaces on Friday, and I had an opportunity to talk to you and talk to a lot of you. Unfortunately, I wasn't smart enough to record it because there's some really good stuff on there. Next time I will make sure I record it, and I will post as a podcast at some point. I'll let you know where to get that. But the bottom line is what we're seeing here in this chart is still very positive. and I've been talking about this leadership change. That's still a possibility, but it doesn't mean, and this is why I went through all of this stuff with the database tonight. There's a very important point, and that's why I want everyone to understand that is what's going on is a lot of stocks are starting to flatten out. Some will actually decline substantially. Some will just go into these high-level consolidations, and we won't know the real results of everything for about 2 more weeks. And once we see the action over the next couple of weeks, then we'll be able to determine what's going to go on with these spreads and whether the market's going to just continue to consolidate here. It can do an internal correction here at these levels. It doesn't have to have the mass sell-off. And when you're looking at these indexes, like I said, even right now, going back to that S&P presentation I made earlier, we still own roughly not 60% of the stocks, but we still have 60% invested. So there's quite a bit there that I could have spent this whole show tonight just talking to you about what's going on internally with the S&P. So there's a lot of things that are just shifting here. There are stocks that aren't participating. So when you get to an individual stock level, things get much more dynamic. So where I'm going to go next, this is the plan for the rest of the show so we can get done. I've been running this thing for about 37 minutes. I'd like to finish in the next 10, 12 minutes or so, maybe a little bit more. But I'm going to go through the interest rates. We're going to cover crude oil. We'll do gold and Bitcoin, I think will be where I go. I don't really need to cover the Dow right now. I'll cover that in the next couple of days if there's anything there. I don't see any reason to cover that at the moment. So let's go ahead and let's dig into the interest rates. And one of the things that I think is important to understand here is we backed off from that 155 range, 154, to back to 1.46. And this is exactly how these things are going to trade. You have to realize the Fed is making these purchases all the time. So, yeah, I mean, when's a good time to purchase? When they're at 155, right? Not at 140 or 130 or 112. So the Fed has been laying off the 10-year. I'm going to show you something on the yield curve that illustrates what I'm talking about. We've been seeing a flattening yield curve. Now we're not there yet, but we're starting to see a little bit of what we call on the bank side of the street, a steepener. And we're getting a little bit of that to happen. So all that's likely to happen as we go through this week on the treasuries is we're going to get range bound. And the bottom end of the range is around 142, 140, and on the upside about 152. So that's going to be your range. I don't know what type of volatility we'll have this week. This is a weekly chart that I have up there right now. And I think we're just going to consolidate this. The PPM1 is at a 1.38. Talked about this last week. As what's going to happen here when we start to come into this week, we're probably going to see PPM2 start to turn up through its second derivative, and we're going to start to set up a larger base somewhere with the downside, the extreme downside 135, 138, and the upside of about 154. So that's just a range we're going to move around in. And I do think the Fed's going to back off a little bit of these purchases of the 10 because they were definitely playing on the 10 over the last several weeks. So I think they'll back off of that a little bit, and we'll start to see some gyrations that are going to put us within this range that I'm talking about here. You'll see something a little bit more dramatic when I go into the daily chart. And we actually got a STX buy signal. So all that means is we're probably going to move toward this 1.48, maybe a high is going to be at 1.5. It's not going to get much above there. The absolute downside for tomorrow is probably going to be that 1.54. So that just kind of lays out the ranges that I just talked to you about. Let's take a look at the yield curve because this is what I want to show you here. And this is a 1030 spread. So you see that this spread is, this pair is starting to turn up a little bit. All that means is the 30 is going to start to advance a little bit more. There might be still a bid by the Fed because this is, listen, they own what, 60% of every treasury right now. So they're dominating the market. Everybody wants to figure out who owns the market. Well, the Fed owns the market, owns the treasuries. 60% of the activity in here has been the Fed buying them, eating themselves, so to speak, grabbing government treasuries and bidding them up or down and moving these spreads around. And if you were following me, if I'm going to turn this chart into a weekly chart, this is a weekly chart. Yeah, so if you were following me back in 2020, everybody was talking about yields. We're going to go inverted and all that. And I told you then, if you went back and watched some of these videos, March, April of 2020, what I was saying then is that we're going to see this thing steepen. The Fed does not want negative rates, even though technically we're negative from an inflation viewpoint, from just a pure numeric viewpoint. They didn't want that. They were going to push this market up to a steepener. What's interesting is we've almost done a full turn. This right here where I'm putting the cursor right here is where we were back at the time. We were around 2%. Now we've moved this thing over here. Let me just get to the most current trade, and we're at 5.54. So we're quite a bit above that number. They're going to want to see this thing steepen again, I believe. So that's what I'll be watching from the standpoint of what's going on with the treasuries. The other one to look at is this one, which is the 530 spread. It's also turning up. So this is what's happening. They're just managing the spreads. They're managing the treasuries. They wanted these things to float up to 154. So now there's going to be the stabilization within the ranges that I talked about. All right, so let's go. Hang on. Get to the right screen. Let's go to crude oil. And this is a weekly crude chart. And we look at ppm. This is a live chart. So we're up down 0.26, down numerically, we're down 0.34. We're probably going to see some sideways trading here, some stabilization. The 10-week moving average, I'm sorry, this is daily I'm looking at. The 10-day moving average, 74.21, is going up almost $1 a day, about 80 cents. So that's going to be 75, and we're going to have support right under this market. And we're seeing the ppm turn higher on ppm 1. And all three of these ppms are in trend mode. So that angle of attack that I talked to you folks a lot about, that's what's happening here. We're seeing that upward slope on all three of these averages. And this is just setting up a bigger trend that is going to unfold as we go over the next several months. Now, I talked about this before. We're just going to see this thing expand. I think ultimately we're going to see the market move up to around 90 bucks. Let's go to weekly. You'll start to see this all happen. And in fact, I'm going to put the Fibonacci projection tool up here. And I talked about this last week. There's some new projections here. All of a sudden, we now have, I'll bring this up on the pop-up here. You'll see high target 1, 81.43, high target 2, 89.04 and 93.75. So this old target that was generated way back in April of this year has now been recalibrated through the pattern that we're seeing here. And this suggests that we're probably going to go, at least initially, and this would be maybe over the next, we're just going to say, I'm going to throw a guesstimate out, 6-8 weeks, we're going to move up toward this 81.43, 8,900 on the crude oil, $89, $89.04. 93.75 is probably not in play right now, but if some of the things I talked about a few minutes ago, as far as the supply and these shipping channels and all this stuff happens, if there's contagion from what has happened in the UK and in China, then maybe this thing grows a little bit and gets some more traction, and that'll put us up at least to these numbers that I just talked about on crude. So not a lot to talk about on a short-term basis, but that is my objectives on as far as that goes. So we're going to go to gold next. And gold had a nice little reversal the other day. Let me get the daily up. So we'll start with daily. And this pattern is becoming a little more optimistic from what we were looking at before. We got that reversal 3 days ago, where we got back above the 10. We're staying above the 10. PPM1 is now at 0, so it's flat. And the resistance points that we're going to look at here is actually going to be at these moving averages. We're just above the 10 right now, but the 21 and 40, 1773, 1779, we get back above that level. And the big number that we're going to have to challenge at some stage is going to be that 200-day moving average, which right now is 1809. So we just need to get back above 1800 to stabilize this market on a short-term basis. We go to the weekly chart here, and what you're going to see here is that similar numbers, slightly higher, 1808, 1800. We just need to get above those numbers. What's interesting is we still have an upward projection here looking at 1918 and higher numbers. But now with everything that's happened, we just need to get this thing stabilized. PPM1 is still a negative 0.30. That's at 1802. That's where the 10-week moving, I'm sorry, at 1779. That's where that number is going to come into play. So we're about $15 from that level. And we get above that on a weekly basis, that'll be positive. But I believe that's probably going to be close to the week high this week. We look at the market grid for the weekly, 1785 is going to be significant. And I think that will be about it if we can get there. So S1, R2 this week, we've seen the low so far 1760. So we could see some intra-week lows coming back in a little bit, but we just need this thing to stay stable for about 2 more weeks. I mentioned this in last week's video, that this is what we need to do from that standpoint. All right, so I'm still going. We're finally getting to the end here. So Bitcoin. Bitcoin had a huge day. Let me just back up here. Let's go to daily. So there's something happened here on Bitcoin the other day, and we got a bottoming cycle. I think I told you folks about this on the video the other day, that we had a bottoming cycle coming in here. All of a sudden, PPM1, a plus 0.31, PPM2, plus 1.9, and PPM3, all of the moving averages are turning up now. PPM1 has a really high rate at 1.31, 44,359. You get lucky enough to see that number, you can buy against that number this week. I still think there's a lot of overhead resistance here. I'll show you on a weekly chart, but the thing that I love, and I've talked to you about this pattern when I see it, is what I call it the rising 10 through this thing. So I only use simple averages, old school guy, 10, 21, 40, simple averages. I don't like weighting averages, just want the simple numbers. That's what WaveTech was developed on back in 1984. So all we're seeing here is we're seeing some of the PPM stall. This is on a daily, but look what happens when we go to weekly. Weekly, 2.10. So this is that rising 10, 46,231. So I'm going to target a downside support now between 46,261. I'm flipping back to the daily chart just to get that number. Bear with me. To that 10 pair moving here, 44,361, 46. Let me go back. And the 10, 46,262. So in that range is where we should support. And my expectation is if we can finish this week out above that 46,000 level, that we're going to see the PPM2 turn up. PPM3 is already positive, and that's rising through the pattern as well. That's 44,645. And you folks know the drill here. You should if you're a regular watcher, is this. Is when you have these cluster of numbers. So we get all kinds of numbers at 44. Last week it was 43, and around 40 was the extreme that was out there on Bitcoin. I know I said it last 2 weeks. Anything around between 43 and 40 was a buy. I mean, yesterday was an insane move. I thought, and we were up at one stage just about $5,000. That was a pretty strong move. So the patterns that are setting up here are continuing to evolve. I've talked. I'm not going to do the real long-term view, but I would just say the key number that we have to watch for, and this number is hard to see on screen. In fact, I'm just going to take a minute just to make it easier to see. I think this will help. Okay, that will help. You see this yellow. Let me go full screen so you can see this. This is an important point on the chart that I want you folks to focus on. This dot right, these dots right above the market here. This is a major pivot number, and that number is 60,612. We get above that, we're going to see a new calculation, something similar, but the old calculation that's out there that will come back into play is 85,000 to 106. And I absolutely enjoy reading the comments, and people say, oh, it's going to 20,000, 19,000. It's actually not. And this, if I went to next level, I'll see if I can get some good charts that I can play out on trading view over the next couple nights. I think there's some better data. This is on TradeStation. They have somewhat limited data to go out into a secular chart and get into a longer term dialogue with you folks. Anyway, I just wanted, this will be the end of the video. I made it through everything that I wanted to talk about. It looks like everything is checked off the list. So it's time to depart. We're right at 55 minutes, so Sunday night ends up to be an hour. Apologize for the length and apologize for the late start. So thanks again. So just real quick, somebody's asking, PPM stands for price pressure momentum. It measures the angle of attack of moving averages. There is a video on the site that explains exactly what they are. So go to the channel. I think there's a section on understanding the analytics. There's a couple of really good things there. So thanks for watching, everyone, and I will talk to you tomorrow night, same time, 9 p.m. Eastern.